Welcome to the mining news today at Commodity-TV with Gran Colombia Gold and Max Silver. Gran Colombia Gold presented convincing quarterly figures as of June 30th in 2021. The company's strategy to grow through diversification is fully on track and has taken a major step forward. On 4th June, they acquired all of the shares of GoldX. Subsequently followed a $300 million issuance of 6.875% senior unsecured notes due 2026 to benefit the development of the Toro project in Guyana. Also, the remaining $18 million of outstanding gold bonds were repaid earlier. The company is nearing completion of an updated PEA for Toro, which takes into account the recently reported high-grade results from GoldX 2020-2021 drill program. Gran Colombia added a 27% interest in Denarius Silver to its portfolio in the first half of 2021, giving its exposure to the Lomero Poyatos polymetallic deposit in Spain in close proximity to the Matza joint venture in the Iberian Pyrite Belt, as well as the Guya Antigua and Segundo projects in Colombia. In February 2021, Gran Colombia also successfully completed the spin-off of the Marmato mining assets, with the company retaining a 44% interest in Aris Gold. Gran Colombia Gold production from the Segovia operation for the second quarter of 2021 was 52,198 ounces compared to 44,377 ounces in the second quarter 2020, and total Segovia gold production for the first half this year was 101,256 ounces compared to 94,723. In July 2021, Segovia gold production was 15,258 ounces, reflecting the impact of a planned 4-day maintenance shutdown at the plant. This brings the company's total 12 months gold production to almost 202,000 ounces at the end of July 2021, a 3% increase over 2020. The company remains on track with its annual production guidance of 200,000 to 220,000 ounces of gold from Segovia in 2021. Consolidated revenue was $96.4 million and $198.3 million in the second quarter and first half of 2021, respectively. Operating costs in the second quarter this year averaged $767 per ounce, bringing the average for the first half to $796 per ounce. The year-over-year increase in total cash costs per ounce reflects, in part, an increase in contractor and artisanal mining compensation rates that had remained unchanged since 2017, which was implemented in the third quarter of 2020 in response to the current gold market conditions. I think this is a fair deal. Higher spot gold prices increased production taxes per ounce, and additional costs were incurred to maintain the necessary COVID-19 protocols to protect the health and safety of Segovia workers and local communities. Including Marmato, consolidated total cash costs were approximately $816 per ounce in the first half this year, compared to $686 per ounce in the first half of the prior year. AIC per ounce sold was $1,101 and $1,110 in the second quarter and first half of 2021, respectively, compared to $965 and $890. The increase in AIC was due to increased total cash costs, as described above, and an increase in mine development costs and other sustaining capital expenditures. Adjusted EBITDA was $48 million in the second quarter of 2021 compared to $37.6 million last year. This brought adjusted EBITDA for the first half of 2021 to $94.3 million compared to $88 million compared to last year. The company's adjusted EBITDA for the trailing 12 months was $194 million at the end of June 2021 compared to almost $188 million in 2020. Thus, it is clearly on a positive trajectory. Net cash provided by operating activities was almost $13 million in the second quarter compared to $7 million last year. Operating cash flow in the second quarter of each year is typically most impacted by income tax payments in Colombia, which totaled almost $50 million in the second quarter compared to $35 million in the second quarter of the prior year. In the first half of 2021, net cash provided by operating activities was over $26.4 million compared to $38.9 million in the first half of the prior year, reflecting higher income tax payments in 2021 and $8.8 million in change of control payments by Aris related to the Aris transaction. The company's balance sheet continues to reflect solid liquidity with cash of almost $58 million and working capital of over $59 million at the end of June 2021. The company returned a total of $7.6 million to shareholders in the first half of 2021 by paying monthly dividends of $4.4 million and repurchasing 702,000 shares of the company at a cost of $3.2 million. Gran Colombia is very well positioned and working hard to expand production and reduce costs. We like the monthly dividend a lot and see the stock as massively undervalued. The share price has corrected with the fallen gold price and is at an interesting entry level. We see the first price target at $8 Canadian. Max Silver put in another good quarter. During the quarter ended in June 30th this year, positive progress was made on the Juanicipio processing plant construction and civil works. Mechanical installation of the flotation cells and filters was completed in Q2 2021. The SAG and ball mills were installed and the underground development has reached approximately 40 kilometers in length now. The first ridge construction with backfill was opened and a trial long-hole adit is being tested. According to reports from operator Fresnillo, the Juanicipio plant is expected to be on budget and on schedule to begin commissioning in Q4 2021, reaching 40% to 50% of its rated capacity of 4,000 tons per day by the end of 2021, with 90% to 95% next year. Then it's straight to earnings at MAC, since they are debt-free and don't have a bank breathing down their neck or have to make any repayments. We like to hear that as shareholders. Batch processing of mineralized material from the development drifts at the nearby Fresnillo plant will continue 2 days per month with continuous processing for an expected nominal rate of 16,000 tons per month. This means money is being made from construction as well. Over 404,500 ounces of silver, 709 ounces gold, 133 tons lead and 209 tons zinc have been produced and sold. This generated pre-commercial production revenues in the quarter of $11.3 million, net of beneficiation and processing costs, and net of mining and transportation costs of approximately $2.4 million. This resulted in a net profit of almost $8.9 million, which was reported as gross profit by Minera Juanicipio in the quarter. On a 6 months, 100% basis, the Fresnillo plant produced and sold over 835,700 ounces of silver, 1,340 ounces gold, 270 tons of lead and 408 tons of zinc. The average silver content of the processed material was 405 grams silver per ton. Pre-commercial production revenues were $21.3 million, resulting in a net profit of $17 million, which has been reported as gross profit by Minera Juanicipio since the beginning of the year. As of June 30th, approximately $127 million remain to be invested, of which Max Silver must contribute 44% or approximately $55 million. This should not be a problem as they continue to mine, generate revenues, and Max Silver has a very healthy $66 million in cash and Minera Juanicipio has $15 million cash on hand. Max Silver is still way too cheap and we are sticking with our initial price target of $47 Canadian and longer term $60 Canadian. Please note the disclaimer that is superimposed now. Thanks for watching us and bye bye from Switzerland.